What's up, guys? This is YAYO, and I'm going to be detailing my YAYO short squeeze trade that I capitalized on this morning in the short video for you. I've been getting a lot of questions about the short squeeze trade on YAYO this morning, and I feel like it's just easiest, most convenient to make a video and kind of address everything at once. So I have a few bullet points here for what I think is most important to talk about on this YAYO trade. I want to preface this talk with the fact that small cap land is all but dead, and I feel like everyone can agree upon that. Um, that's important for this YAYO trade because this creates an environment where short sellers may be more aggressive uh, during low volume times, as we've seen, which I like to identify 2 times a year with a shift in sentiment. The first shift is the low volume months in summer, where everything is more likely to gap and crap in the small cap land. And this creates an environment where short sellers get overly aggressive and they're looking to short at the first sign of weakness that they've identified as weakness. And then when you move into winter volume, a lot of these traders get caught off guard in the one super epic squeeze and they get really hurt on that squeeze. And that's because they've been so used to shorting because they're anticipating a gap and crap scenario. The second time of year where we really see sentiment change is when, now let's move it on the flip side and let's talk about longs. So perma bulls may be very aggressive and happy when there's winter months because usually there's a ton of volume associated with these months and everything is running. Everything is BTFD, if you will. And they get a little bit too confident and comfortable. And when summer months come in, they usually run into a lot of turbulence because their dip buying and chasing is no longer working because the volume can't sustain stocks moving on a tear like that anymore. So I feel like the YAYO trade was important because the market in small caps has been dead. It's created an environment where a lot of things are just gapping and crapping. Also, I want to talk about the basically the fact that YAYO was the main play of the day, arguably for small caps. I mean, I don't see anything else that would have been um, had more potential than YAYO. And I'm going to talk about the word potential a lot during this talk. And I always like to identify a stock's potential rather than having an expectation for the stock. So I really try and stay away from having expectations on stocks. I like to identify objectively a stock's potential and stay cognizant of the fact that the stock may set up for me, and I'll look to stay on the right side of that trade if I can, using some of my checklists that I run in the morning. So I want to talk about some of the things that I thought that were very important, pertinent to the YAYO chart. The first one I'm going to talk about is the day, and it's important to identify that this is a day one chart. This is a day one move. That's important because you're going to have a lot of the gap and crap short sellers all over this, anticipating the gap and crap. And I'm going to talk about a little bit of price action and some possible scenarios that I've identified that I'm looking for on these charts. But day one is also good because you're going to have a lot of long retail too. Really, what we want is a ton of volume. That's something that I feel like we can all agree on that is best, having a ton of volume. As you guys know, I am a big proponent of volume analysis. I have multiple volume filters. You guys know that I run profile as part of my analysis. I'm also running a forecast to help me spot demand. I'm a huge proponent of float rotation and abnormal volume. And I'm going to talk about some of my indicators and things like that at the end. But from a price action standpoint, I've annotated 3 possible scenarios that I can see objectively that a short seller might be interested in when looking to short YAYO. Okay, so I don't necessarily use these But one thing I like to do is put myself in the shoes of average retail. And I like to really understand, try and put myself in a place where I can identify that retail may be in trouble. So I've seen on this YAYO chart three possible and pretty likely forms of an entry that I'm looking for on all my charts. But on YAYO, I've identified three. The first thing that I feel that retail is referencing is the pre-market high, which also happens to be $2 area, the whole and half dollar marks that a lot of retail uses. I don't find a ton of value in that as I'm more Fibonacci based instead of just normal price level based. But I do know that it does have merit and it is something to keep an eye on at the very least, even if you're not executing trades around that form of analysis. Everyone is looking at the whole and half dollar marks in retail, most likely, so it's important for us to be aware of that as well, just like the VWAP, which I'll talk about in a second. So the first scenario that I can identify might be the stock opens, it rips, and people on the short side might be adding and starting in here looking at pre-market high as a risk. Okay, they might be waiting for a pop above VWAP using pre-market high as a risk. Now that's the first scenario that I can identify that shorts might have been trying to capitalize on. The second scenario that I could see shorts trying to capitalize on is the opening spike, rejection of pre-market high or near pre-market high, slamming the VWAP. Now, I've been pretty vocal about my stance on trading the VWAP, and I've caught some flack for it, but I'm going to try and explain why I feel like the VWAP is very important, but maybe not used in its most traditional sense. Now, as far as indicators go, the VWAP is probably a top 3 favorite, if not top 2 or a top favorite for retail. You can assume with pretty good confidence that people are shorting on the VWAP breakdowns and longing on the VWAP reclaims. I do not execute trades at VWAP, but I am hoping that a ton of people are so that I can identify that they may be in trouble. Okay, so that's exactly what I'm looking to do on my short squeeze plays. I'm hoping that everyone is slamming the VWAP and getting stuck. So that would be my second scenario that I feel like a lot of short sellers would be slamming on this breakup, on the second break of the VWAP. The third scenario where I feel like a short seller might be shorting or shorts that are in might be adding is the open low. This is my green line here, this 158 area. The opening spike low, actually the fade low, spike is usually associated with ripping higher, so we'll use the word fade. This open fade or flush down to this 158 was a very important level because it's also the swing low from pre-market action. So this might be the third place that I've identified that shorts would really pile in or enter at all. And what's most important with number 3 is that when price breached this 158 level, it did so with pretty good volume. We have 215,000 volume on that candle. If you use comparison to the previous few candles, this most likely tells me that longs have stopped out there. They were using that as a risk. And this most likely tells me that shorts have added there or have started in there. That big volume is very key. So this tells me right now from a short seller's perspective that anywhere from 187 to 158 shorts are fat and happy. And that's exactly what I'm looking for. I'm looking for shorts to have piled in and I'm looking for them to be caught off guard. And in all three examples of this, shorts are likely have taken a position in this stock and have possibly added. So this is very important. This is the analysis that I run on all my tickers, and so that's the first step. Okay. Second thing I want to talk about is the first rotation. The stock rotated its float at 9:39 a.m. and this was a huge tell for demand. As you guys know, float rotation is an objective way to spot demand. The number of rotations that a stock has and the quicker the rotations are heavily weighted upon a stock's demand, the volume, the demand of the stock at that time. The quicker in between rotations, such as from this line to this line, being 29 minutes, versus from this rotation to this rotation being 58 minutes, you can objectively say that there was more demand inside of this time frame than there was from this rotation to this rotation. Okay, you could also see it by the volume below, but one thing I like to do is I love to track volume. I use a lot of forms of volume, VP, forecasting, float rotation, and abnormal volume, and then of course liquidity filter. But let's talk about these likely scenarios for shorts. So around 9:43, I can assume with pretty good probability objectively that short sellers are in basically balls deep. And now I want to use 2 and 1 as guidelines for where the pain points might be for a short seller. Number 2 being the VWAP may be a great area of risk that the shorts at number 3 are using. They may take half off here, they may get out here, and for number 2, number 1 would be a great area to reference as risk if they were in at number 2. So the reason why I look to identify this on every chart is to help me understand who's really in trouble and what the stock's potential is. So when I see the float rotation after these 3 scenarios, the VWAP has been slammed, that open low has been taken out with volume. I see the float rotation. There's a lot of volume around that point. And then this indicator right here, which is my blue arrow, that's my abnormal volume indicator. This shows me objectively that there is a ton of volume coming in at this time. This is very useful for me because I don't have to look down here, but looking down here works as well. You could see I've annotated a quick little trend line showing that volume has dropped off of a cliff, and then we see the huge spike. And this arrow will help me identify as well abnormal volume. So I see abnormal volume coming under the trap, and that is extremely important for me. That's now I've identified that shorts are very hurt. And very stuck rather. Shorts are stuck and they have all likely slammed the stock. It's a micro float. It's the first trap, which is my favorite. I know people have, different preferences for the number of traps. I don't mind if it's the morning or the end of the day, as long as it's the first trap to really catch shorts off guard. That's the one that works best per my data. And of course, I took a position in early because I didn't see any resistance on volume profile. I added, didn't get my full add, but I looked to sell on the new high of day, and it was a sick trade. And I hope you guys have enjoyed this quick little analysis on what I'm looking for. If you guys like the indicators, you can check them out at Scripts to Trade. That's where I get all my stuff from. And you can find me in Mad As Money. Cheers.